head over to fidelity.com. Now, where we're going to spend most of our time is you can go to the news and research tab and you're going to go to stocks. You could also look at markets and sectors or ETFs. It's going to really lead you to more or less the same spot. But why don't you go ahead, if you're following along, news and research, and click stocks. From here, this is the sort of the stock research page. It has a lot of high value, kind of high view info. There's a link here to our stock screener. There's investment ideas that are daily posted from, for example, Zacks. We'll talk about that in a minute, that there's a number of certain featured investment or research reports, and there's also a large number of different third-party data that Fidelity allows us as clients to utilize. And then there's other, market data in terms of what are some of the top stocks in terms of most actives, percentage gainers, percentage losers, etc. However, one area we can go just to start in terms of researching what kind of research reports or what kind of firms am I going to be able to utilize. And right off the bat here, you'll see this little paper icon, and this says research reports. I'm going to let Nick here go more into it in just a few minutes here. However, if we click on that link, it's going to give us a list, and this is not an all-inclusive list to my knowledge. I think there's some others as well. It's going to give you a list of some of the research firms that Fidelity utilizes, where we can see a lot of their reports, their data, and it's going to give us a little bit of a synopsis in terms of their methodology, their approach, their style, what they cover. You'll notice that some of these firms don't have necessarily a one style approach, or so some of it's kind of not filled in there. But for example, you'll see that some, like for example, Argus and CFRA, are more fundamental analysis heavy, and they tend to favor growth style equities. Whereas if you look at Recognia, for example, they do focus more, and also Trading Central, they do focus more on technical analysis, right? Looking at charts. So it's important that you understand right off the bat that there are some firms that utilize a specific style or a specific approach there. Now, of course, there's also the enigma when we see price targets. So we want to understand that, okay, sometimes these firms can kind of lag where they look at the data. For example, there's certain companies that after reporting earnings are down a lot, and then they come out with a downgrade. And you might feel like, wow, gee, thanks. You tell me now that it's a sell, or you downgrade after the stock is down tremendously. So there is a little bit of sometimes this lagging indicator where firms can say, okay, with more fundamental information, we're now going to change our score. And perhaps before, again, we get kind of deep in the weeds here, maybe we want to talk high view in terms of what these firms do. This is sell side research. And what do we mean by sell side and buy side? For those of you who haven't worked in finance, if you haven't worked specifically for a Wall Street firm or in finance broadly, the industry tends to, again, not every single company necessarily falls into one of these tranches. There tends to be this kind of dividing line where you'll hear, did you work for a buy side firm or a sell side firm? The buy side firms tend to be the money management, the decision makers, the asset management side of the business, whereas the sell side tends to be the research, the data, the order flow, that type of firm. So these firms, again, do receive compensation for doing their research. They don't do it for free. There's different ways and different rules in terms of what kind of compensation they can receive. But keep in mind, research and data are their stock and trade. So sometimes you have I think it's healthy to have a little bit of skepticism or cynicism. They want firms to subscribe to their research. So they want their research to be good. They want their research to be helpful. There can be times where every once in a while you get an analyst that has kind of a crazy price target, either super bullish or super bearish, that's pretty far away from the consensus. And sometimes you want to scratch your head and kind of ask yourself, why are they sticking out? Are they doing that on purpose? Are they trying to gain more attention? It's sort of this, hey, look at me, I've got a kind of unique view. And sometimes that can lend themselves to, again, get more people to subscribe to their research. So again, we want to understand this idea of consensus, seeing a lot of different opinions. what's the most extreme on one side, what's the most extreme on the other side. The truth is probably somewhere in the middle. And so the idea again is this can potentially help us make investment decisions. So Nick, I'll go ahead, turn it over to you. Tell us before we kind of again dive into the specifics here, maybe you'd like to take us into some of the specifics. What are some of your thoughts on analyst research, analyst price targets as we start out here?
Sure, absolutely. And the way I always remembered buy side versus sell side is, thinking about it from the standpoint of why is the analyst providing the information? Are they doing the research because they're looking at buying stock? Like think about Fidelity with FMR Co. If you're an analyst working for FMR Co, are you doing this because working for a fund, or are you selling your research, so to speak? And so that buy side to me is always you're doing analysis on a company because you're looking to buy the company. Where the sell side to me is you're doing the analysis because you're looking to sell your analysis, or such, or give people reason, like you in the audience, on why you should buy or sell your particular security. So it's a little bit of that spin on that. And a lot of analysts, they prefer to in the end, you'll wind up somewhere where they're the buy side firm versus a sell side firm, so to speak, with that. That said, there are a couple things I'd like to kind of introduce everyone to, when it comes to what Fidelity offers. We do offer, there's a lot when it comes to the different firms, the different research, and kind of in general, on the left-hand side, if you look, there's something that says research firm scorecards. And you can actually look at and dive into how each of these firms are rated. Some are rated better than others, and it's also more than that, because it's not just, well, one is trash, so to speak, and one's the one you should listen to. One firm might specialize in, let's say, technology, and they're fantastic in technology, but when it comes to utilities or energy or real estate, that's just not what they're known for. Or another firm might be fantastic on debt research, and as such, they do really well with utilities and real estate. But when it comes to the technology sector, they don't do so well. And so it's a little bit more, you know, nebulous than just, well, this is a good one, this is a bad one, so to speak. That they all have their pros and cons. Some of these, for example, do lean more fundamental. They really dive into a company's books and such, what they report on a quarterly basis. Others lean more technical. I know Refinitiv Versus has that quant model, so to speak, and they do tend to be a little bit more technically driven and such. Actually, Trading Central I know is really big with that technical analysis. That was what I meant to point out for being, technically driven with that. So with that though, Troy, I'm just going to steal the screen real quick, and we had a couple symbols that were mentioned. If we could take a look at, and I'm going to start with we'll start with AMD, and something I kind of want to introduce everyone to, because it's a lot. Looking at all of the different analysts, and I know when it comes to things like this, I've mentioned this before in a lot of our fundamental sessions, but the quality of data that Fidelity provides is institutional quality. And I know, for example, I've had the benefit of speaking with some of Fidelity's fund managers, and they've mentioned that the quality of information that we provide for free is as good as what they get and what they pay quite a bit of money for. And I've had the opportunity to dig through platforms, that traders will pay hundreds of dollars a month for, and there's more on Fidelity's website than is in some of those platforms. And sometimes it's even easier to read, easier to look through and such than what's on some of those platforms. So that said, this is AMD. This is the landing page for the Stock Research Center. And so one of the big places to go through from an analyst opinion perspective is simply analyst ratings right here. So with this, there is, of course, so much we could go through, from diving through the dividends and earnings, these statistics, actually seeing what the reports are that was filed with FINRA and such. But we could literally spend all day, every day for the rest of the year and just barely be scratching the surface on that. So, I do want to focus a little bit more on some of these third-party analysts. Now, one thing that Fidelity provides, and this has changed names throughout the years, is it's the equity summary score. Equity summary score, and then it's the equity summary score powered by StarMine, and then it's the StarMine by Thomson Reuters, and it's Refinitiv, and it just kind of changed names as the ownership kind of changed, or as companies merged and such. So this is now the equity summary score. It's provided still by StarMine from Refinitiv on here. And what this is this is an accuracy weighted score. It makes it easy to digest. So this isn't just a buy, sell, hold. 1 through 3 stars, 1 through 5 stars. What's the difference between overweight, underweight, market weight? All these different things. Neutral and such. That it takes everything and it standardizes it. And then not only does it standardize it, but it accuracy weights it. Like I mentioned, some companies tend to do better with technology versus utilities, or vice versa. And so what it will do is it will give it a relative accuracy score based on how well that analyst's recommendations do within that particular industry and sector. And if you want to dig more into that methodology, if you click on this little question mark here, you get a little bit of a pop-up. They'll kind of explain that and how it does that, how it weights everything, looking at the last 24 months and such. And if we're looking at the equity summary score, and if we were to shift over to a competitor of AMD, let's say Intel or Nvidia or something like that, well, Jefferson Research is going to have likely the same relative accuracy. But if we're to shift over to maybe Amazon, still many people think technology, but Amazon's actually more consumer staples and such, as opposed to technology hardware. Jefferson Research is going to have a different relative accuracy, because that's a different industry, different sector and such. Now, with that, it'll take all of these, and you then get a score that's on a 0.1 to 10 basis. So as opposed to being a buy, sell, hold, 1 to 5 stars, it's 0.1 to 10. It's a lot more granular. Anything from 3 to 7 is neutral. But if it's a 6.9, that's closer to being bullish, versus if it was a 3.1, where many other analysts that would just show neutral or 3 stars, you wouldn't know the difference with that. 7.1 to 9 is bullish. 9.1 to 10 is very bullish. Of course, 1.1 up to 3 is bearish, and 0.1 to 1 is very bearish on here. And so it gives you a lot more granularity. And while this is bearish, if this were just a little bit higher, this would be considered neutral. So this is just barely on the edge of bearish, so to speak, but is enough to actually be considered bearish. So this gives a lot more granularity with that. Now, something else that's beneficial to dig into is kind of looking at historically how well the equity summary score is done. And I'm just going to pull up a quick research page. And going back to where Troy was, there's a couple different ways you can dive into this. You can see some of this information. And so I'm going to look at the Stock Research Center real quick, news and research, and then stocks. And some of these pages you can absolutely bookmark. For those that haven't bookmarked it yet, I'll show you a couple of different ways that you can get to where the different analysts have their opinions, have some of their published things. So from here, one thing you can do is just where it has powered by Zacks. Click on Zacks right there. And this will actually zoom into Zacks. And over here, research firms. We'll show you all the firms. Firm scorecards and such will show you the different firm scorecards. And that one that was right here, here's the equity summary scorecard with this. Now, one of the interesting things for me is, if you're looking at, what the equity summary score has, the frequently, the very bullish outperform on the broader market. Now, this is showing the last 1 year that the bullish has actually done a little bit better than the very bullish, but we can then see all covered stocks versus S&P 500 total return on here. Last 1 year, a little bit less. With that, let me shift back to life of model. And we can see the very bullish stocks slightly outperform that blue line right here, and the bullish just right at the broader market and such. And so some different things to think about with this when it comes to this model, that there's a lot of backtest information. I do know that if you look at it and you break it down by sectors, the utility sector will stick out to you because, well, there's only just a handful of companies with that. And if you have one company that you have rated very bullish on and it just drops like a rock, it will mess up the data for a long time on that, just because there's not other data points to average everything out with that. And so I do know the utility sector, shift over here, orange by sector, and we can see very bullish versus the all cover stocks average on here. Telecom now is the one that sticks out. So utilities is like this and such, but there's a lot of information you can dig into. This is 1 year. If we go to life of the model, things shift over as well with that. So coming back to AMD, and with AMD specifically, analyst ratings. So this starts to get back to where Troy was talking about the different analysts, their different research reports. A lot of really good, fantastic information over here. And these analysts that participate in the equity summary score, you can typically come over here and actually dive into their opinions. So one, I'm going to pull up. We'll dive into Jefferson Research. And there's a lot of really good information here with them. One of the benefits, of course, of this is you can actually take a look at their methodology, how they arrive at their decisions. Are they very quantitative based, or are they based on an individual that actually develops their opinion, so to speak? Because some are more, computer driven, where some will rely on, actual the actual individuals doing the research, and then some that can of course depend on the individual, can depend upon their department, their training and such, and also can be why some companies do better than other some companies do better in some sectors than others. So let's see, that should have fixed the focus on my camera real quick. But here we can take a look at everything that Jefferson Research was saying about it. We can see, what they look at, price trends, cash flow, and such, how they're rating their earnings quality and everything, what they're looking at, and why they say, of course, what they're saying. Different analysts have different things that they'll look at. They'll have different conclusions and such. And, some of these do also have price targets. And then getting back to, some of the things that we're talking about, at the very beginning, the fundamental research and price targets. I do know, for example, if we come over here to, I do believe we're going to be looking at, we'll look at Refinitiv Versus. Here, Jefferson is one. We'll have one quite commonly, Refinitiv Versus. Everything will, of course, depend upon which security, because some of them will have price targets and some of them won't have price targets on here. You'll have to look through those reports to see which one has that here. Price target right over here, 12-month price target high, low, target versus current. At their target price, of course, 12.1% up there at that mean 187 compared to where the security is at right now. A lot of really good information with this. Troy, I know I've kind of talked a little bit about the equity summary score. We're shifting back over to some individual firms. Anything that you might want to elaborate on as we continue on?
Yeah, Nick. So, again, every firm's a little different, right? So some firms do a simple buy, sell, hold, right? The idea of a buy recommendation is usually they're going to have a price target, or they're going to say, hey, we believe that this security is going to outperform the broader market over the next 6 to 12 months, or something along those lines. Whereas some firms will use more of a market weight, underweight, overweight type of concept. I think it's interesting, you pointed this out, that with the equity summary score, again, what it's trying to do is for the 1,500 largest companies, it's going to give it what's called a forced ranking. So, there's some firms out there that just throw a buy stamp on everything, right? They'll say everything's a buy. And then that's not really super helpful, because if everything's a buy, well, if this stock is a buy and that stock is a buy, if you're trying to pick one or the other, there's this idea of scarcity, right? You can't just buy every stock. You could use an index fund, you could dollar cost average, but it's going to be really hard to buy 1,500 stocks individually in a portfolio. You might be, again, better off just buying an index fund or something that tracks the broader market in some way. So again, what I'm looking at too, I'll go ahead, just steal the screen. Feel free to grab it right back anytime you need to, Nick. But one of the things I'll look at too, and again, for screen share purposes, it'll pull up in a new tab. So I'm not sure if I can quite show it, but there are some other reports where it'll have kind of everything in one little report. That's what this company research highlights report will have here too. So we can research the firms. We kind of did that a little bit towards the beginning. We can research the firm scorecards. There's some firms that will do better than others. Keep in mind, again, even a broken clock is right twice a day, right? So some of these firms have a really great history, but does that tell you that they're going to continue to have a great history in the future? Not necessarily, but it's nice to know that, hey, there's some, for example, there's some analysts that have a pretty good track record. Maybe that tells us they have their finger on the pulse, and we might want to pay a little bit more close attention to what they're saying as opposed to what somebody else is saying. So, for example, I'm still sharing the screen share for AMD. We'll see here, for example, if we look at the Refinitiv StarMine relative accuracy score, so this is how much are we weighting based on how accurate their recommendations have been, we can see Jefferson's quite a bit higher rated, and they have a sell rating on it. ISS-EVA is 69. Okay, that's a little bit higher than Trading Central. It's got a sell rating on it. So whereas if we look at Argus has a buy rating, and then this is all within about a couple days. So the idea is we can read who's really bearish, who's really bullish, what are their cases. Again, some firms will be a little bit more, okay, the company's done well, we think there's headwinds, and they're more, forecast driven, whereas some of these companies are more kind of past quant driven, where they'll say, okay, this company's had really good operating efficiency, really low debt, strong cash flow. We're really bullish in terms of how they're positioned in the industry, blah, blah, blah. So we kind of have to use that methodology to say, all right, if you're bearish, what are you looking at? If you're bullish, what are you looking at? And then I have to, or you have to, as the investor, say, what am I going to choose to look at? If I know the bear case maybe is this and the bull case is this, what's kind of the catch-22? Another thing we can do is we can click here on other opinions, because these are just the ones that are going into the equity summary score and that we're able to see their actual research in terms of generating a report. If we go into other opinions, you'll see, and what I'm going to do is I'm going to click standardized opinion. And keep in mind, again, every firm does this a little differently. So, just because two different firms both have a buy rating, one could be a stronger buy rating. So just keep that in mind. But if I click this, we can say, all right, Wedbush, UBS, Stifel, Roth Capital Partners, Raymond James, Merrill Lynch, KeyBank, Jefferies, Citigroup, Argus all have buy ratings. You'll see sometimes there's certain research firms they'll say no opinion. So we're either not covering it, or again, maybe they had their lead, analyst that's on vacation or suddenly left the firm. Who knows? There could be a variety of different reasons. And then you'll notice here, in addition to buy, there's a couple different firms, Wells Fargo, Piper, Jaffray, Morgan Stanley, Baird, all have an outperform rating. So that's telling you they expect this security to outperform either the sector, the broader market, something like that. So that's obviously a favorable or a bullish rating. And then you have a bunch of neutral. Now, we don't really have, again, from the other opinions, we just saw that, for example, Jefferson, ISS were both sell, and then Argus was buy. We can see, and again, sometimes this is the case for a lot of securities, right? The market, broadly speaking, tends to go higher over time. So a lot of firms tend to be more on the bullish slant too, with the idea that, hey, again, the market broadly tends to go higher. So if you're going to be bearish on something, you probably have to have a good reason for it. Because if your price target is just bullish or above where it is currently, all right, if the company does moderately well, it can hit that price target. And you'll actually see with companies that are really strong, you'll see firms just keep having to raise, and they'll keep raising, and they'll keep raising, and they'll keep raising, and they'll keep raising. And then sometimes you'll see certain firms that are stubborn that'll say, we're bearish, we got a sell rating on the stock. And then the stock does amazing and they don't move their rating. And it's like, obviously, guys, you were wrong. So what are you going to do here? And sometimes they'll just keep it there and they won't adjust it. So again, every firm is a little different. And so you have to kind of take this with a little bit of a grain of salt. Again, be a healthy cynic, right? There's a healthy amount of contrarianism, a healthy amount of skepticism. I don't think you'd want to look at a stock and say, everybody's bearish, therefore I got to buy now. You might want to have, I think, a deeper rationale for doing that versus if you see everybody who's super bullish on it, you don't say, I got to short the stock right now. You probably have to have a little bit of a better reason than just that. Wouldn't you agree there, Nick? Or what do you think about
Yeah,
that?
absolutely. A great example of that is, everybody was bearish on Radio Shack and Blockbuster. But does that mean that you should have gone out and bought shares of Radio Shack and Blockbuster? These companies aren't around anymore. Now if you if you came up with a compelling argument on why you should be counter to what they are, that's going to be something different. Likewise, there are firms that out there that look for the counter bullish argument. Some really well-known firms that will short companies and all that. And depending on the firm, this actually comes back to the firms. Some of these analysts can actually move stock prices. If a lot of people look at it and go, well, they're saying buy, so yeah, well, we should go ahead and buy it, or they're saying sell, we should sell it. That can shift things around. Other firms, it doesn't really move things when they change their particular opinion. Now, some of these firms on this list, Merrill Lynch, Morgan Stanley, and such, well, we do provide their opinions, don't have their research. To an extent, if you want Morgan Stanley's research or Merrill Lynch's research, well, they're that full service brokerage firm, so to speak, and you get their research by having an account there and paying for that with that account, so to speak, and they'll provide some of that information for you for you're buying their information with that, just like other sell side analysts that are selling you their research, so to speak. It just happens to be that with Fidelity, Fidelity has entered agreements with some of these other analysts, and we're able to then provide that research to the Jefferson Research and such, and some of these other ones are able to provide that, then getting into the equity summary score. So just something I thought I'd add in there, Troy, as we're continuing on.
Yeah, absolutely. And I was able to pull up again that company research highlights report that's under there. What this does do is, again, it aggregates a lot of the different information. You'll see you've got some key statistics, some chart performance. And then if we go down, it does give you a little bit, again, not really a ton of specifics here, but it does give you a 1 year history. Now, if I know, okay, Merrill Lynch was neutral, you have a gray line here, and then they've been a buy, you don't really know exactly like what their price target was. So again, you don't get a lot of that, but then you can see, for example, that ISS EVA has had a sell rating on it in 1 year for a 1 year history. And AMD, if you look at a 1 year chart, the stock has done pretty well. It's tucked in quite a bit from some of its highs. But then you might look at that and say, all right, ISS probably doesn't have their finger on the pulse exactly of this individual security, or you might draw some other conclusion. Something else you wanted to add in there, Nick? Oh, okay, just came off of mute. All right. So that's one thing. Here's another thing that I think can be super helpful. So if you go to, again, we're on fidelity.com. Here's another place you can go. You can do this on fidelity.com. You can also do this probably a little bit better on the Active Trader Pro platform. I'm going to go to View All. Now, what you can do, again, this is more of a news flow kind of aspect to look at some of this analyst data. But if you scroll down, again, I clicked View All tab. I'm scrolling down to where you see news. And what you're going to see here is amongst the news, company announces dividends, XYZ person did XYZ, right? You're going to often see, especially around earnings, you're going to see a lot of these research firms are going to say, okay, new earnings, new data, did that affect your model at all? And you'll see a lot of analysts will upgrade their ratings. So for example, when you see a stock reported earnings, and let's say it's gapped down pretty hard, are you seeing a lot of downgrades? Again, that's pretty, understandable, isn't it? If a stock does bad, there was obviously something that investors or analysts were looking for that they didn't get. However, every once in a while, you'll see, okay, a company did bad. Do you see a lot of other firms reiterate their rating, saying, hey, we had a buy rating on this and we're keeping our buy rating? So that means potentially if you're trying to make a decision about, hey, this company is down after earnings, it's a small part of my portfolio. Do I want to, cut it, take a small loss, or do I might maybe want to give it some more time, give it a little bit of space to bounce back here? Sometimes you can see analyst reports where they'll again maintain, or sometimes they'll even upgrade, and that might be a little bit of a head scratcher or a surprise. Wow, okay, stock's doing poorly, but this firm is actually upgrading their rating. Maybe they're more looking at a value focus where they're saying, all right, here's our outlook for the company performance. Maybe they were a little bit more conservative, but maybe with the price tuck in, they're saying we see a little bit more value now. Maybe that the PE has come down, or there's something else that they're looking at arguably. So for example, this came out about an hour or so ago. If we go ahead and click on it, it's going to say CFRA, that's one of those research firms, maintains buy opinion on shares of Advanced Micro Devices, or AMD. You can see a little bit more. Sometimes they'll have more information. Sometimes they'll have a price target. Sometimes they'll have a little bit more. It doesn't look like it gives a stock price target, but it gives a little bit more reason of why are we maintaining. And you'll see greater insights among AI hardware capabilities and data centers and PCs, blah, blah, blah. So you can read all about that. And then here's another one here. Bank of America, B of A Securities, adjusts price target on Advanced Micro Devices to 195 from 185. So where's the stock trading now? It's trading at about 161. Maybe I want to just refresh just so that we can see where it is right now. It's about, let's see, 161 and a quarter, give or take. So it's down on the day. So down about 3.3%. So we should notate that. So Bank of America Securities adjusts price target to 195 from 185. So not only are they maintaining their buy rating, they're actually upping their price target. So what are they looking at? What is B of A Securities looking at that made them want to be more bullish than where they were previously? They can say, if we look at this note here, and here's where this is like a typical one that you'll see, where again, Fidelity doesn't have Bank of America Securities, as an analyst in terms of their info. So it'll just say, AMD has an average outperform rating and a price target of 125 to 250, according to analysts polled by Capital IQ, blah, blah, blah. So it's just interesting, right? You're not able to look more into it and ask kind of that why question. But when you start to see, okay, a lot of analysts are saying the same thing, does that affect the stock? And again, it's going to go into this what's already priced in versus what is their argument and how does that fuel your outlook. So you'll see some stocks that are beaten up that, for example, if you look at a 1 year chart of AMD, you can see it was in a pretty strong downtrend, eventually broke and went on a ride for a while. It's now been tucking in and it's now been going sideways to down for right around about 3 months or so. So the question is, if people are upping their price target, are they saying, okay, we were bullish on the long-term growth prospects of AMD, but when the stock was at 200, well, now the stock's at 161. So maybe there's more attractiveness in the valuation. We know there's different approaches to fundamental investing. Some people might be more in the value camp where they try to look for a company that trades maybe less than probably what it's worth over a longer term. Sometimes stocks will go out of favor based on current market sentiment, based on market dynamics. If something has a little bit more interest rate sensitivity, maybe it's a higher dividend, maybe it's in a sector that's kind of being poo-pooed right now. Whereas, again, some of them might be that more of that growth at an affordable price or growth at a reasonable price in terms of their outlooks. They might say, hey, we're pretty optimistic on their growth prospects, but the stock is now $40 per share cheaper. So maybe now that's something that's telling us there's more reasons perhaps to buy AMD at lower prices. But again, at the end of the day, spoiler alert, no analyst has a crystal ball and no analyst is going to be able to accurately 100% predict the future. You will, if you pay attention to a lot of these reports, you'll establish a list of like 2 or 3 analyst firms that you really like, and you'll say, I understand their methodology, or you start seeing a certain format to some of their reports, and you'll say, okay, I've seen what they do with one report, and then you look at another stock and you kind of are used to their structure. Where some of the firms, they have kind of a more complex quant-based system. And again, you might shake your head at that. You might say that's useful. Different people are going to look at that and have kind of different, conclusions. So on the View All tab, you can go to News, and I will show this real quick. I know we want to spend most of our time on Fidelity.com, but if we do go to, for example, Active Trader Pro, this was another stock symbol, VEEV, that was requested. This is a mid-cap healthcare name. And for example, if we have Active Trader Pro does have a news tool. So I have that already pulled up in my list of tools. You'll be able to go through and you'll be able to see, again, you'll see a little bit more of these headlines compared to the Fidelity.com, which only gives you a couple. And a lot of times you can scroll and you can see the last couple days. You can see if there's analyst changes. I'll make sure I'm actually sharing my Active Trader Pro. Let me go ahead and just make sure I'm actually showing that. There we go. All right, so this is the stock symbol VEEV requested by our audience. Thanks so much for that. And again, I just pulled up the news and research and then went to news. And then what you can do is you can link it to a chart, link it to Gray, and then pull it up if it's in a watch list or if it's in your positions. And again, you'll see a lot of headlines. If we look at the most recent headlines, we'll see, okay, Citigroup adjusts Viva Systems to 256 from 274, maintains buy rating. Okay, I'm looking at the stock. The stock is at 174 right now. Okay, they lowered their price target, but they're still bullish. What is that telling me? That doesn't really help me now when I look at the stock. And if I already have it, maybe we bought the stock in the mid 200s or in the low 200s. Stock's at 174 now. That hurts. Maybe we want to zoom out and say, all right, what's the history? We can see the stock had quite a boom during COVID. That makes sense. It's a healthcare name, healthcare technology, cloud-based software type company in the healthcare space. It's right near its multi-year lows. We can see it formed some lows here right at about May of 22. So that's about 2 years ago. So it's kind of hovered and held support here and not violated this area. So if we're, again, understanding price history and then blending that with some of this analyst information, we should say, okay, if it's held here before, perhaps it holds again. It should find a bottom soon. And if it doesn't, that might give us a signal that something's different this time, because if it's not bouncing, well, it's bounced several times before. So maybe there's something that's different. And again, we don't want to go off of just one analyst. We want to survey the field, understand what's the consensus. Is the consensus bullish, neutral, bearish, maybe a mix? What are the arguments on both sides, and help us to understand not only the merits of an investment from a long side or a trade from the short side, but then what are the risks to that? If I say, all right, it's made a low here or it's near a multi-year bottom, my thinking might be, okay, it's going to hold here and eventually bounce. Well, what's the risk? The risk is that it doesn't, and then it pushes lower and continues going down. So again, we want to think about not only the opportunity in terms of what an investment can do for us, but we also want to think about the risks and understand, okay, there might be some stocks where we see opportunity, but sometimes the risk may be too high for even what opportunity we see. We might say, hey, there's a decent amount of opportunity, the risks might be greater. So from a reward to risk perspective, it might not be great, versus you might look and say, I think the rewards are decent. The risks I don't see as super high. So again, you want to kind of understand that risk reward dynamic there. Nick, anything you want to add, or maybe take us into some other of that fundamental data?
I think you made a couple really good points. And one thing I want to elaborate on is things can change really, really, really fast. You have one analyst can, change your opinion from buy to sell, just boom like that. Maybe something new came out, maybe a new view, a different piece of information that they're using to adjust things. Potentially, they had a price target and the price came up to their target, and they might say, no, we're still at that target, and they're then shifting from buy to sell or buy to hold because it's at that target. Everything, of course, depends upon what they're looking at and that availability of the data. Now, when it comes to fundamental data, like we mentioned before, how often do we get new fundamental data? Now, typically, it's about once a quarter when a company releases some new information. I'm going to just steal the screen real quick, Troy. I want to share something, and I'll have you go ahead and take it back and take a deeper dive into that other company that you're pulling up. This is a just kind of a quick screenshot that I've pulled from Icon, and it's something I used when we're talking about NVIDIA and such for one of our earnings briefings. And I think this was really interesting information because this is showing price and price targets. And there is a, of course, on Fidelity, some information showing, equity summary score where price is compared to some of the equity summary score information that we'll try and show. But you can see, the price targets sometimes they don't change. We see it's staying kind of the same, and then price kind of came up to price targets, and really the target and the price were about the same until both leaped up at the same time on NVIDIA. Now the price targets were kind of increasing slightly while there's more volatility in price, and boom, leaped up again. And then price came up above the target and then back down, and then price target leaped up. There's been some adjustments on here. If you look at the timing of some of these adjustments, when this lifted and this lifted, and how this is right about a quarter apart, probably would be a safe assumption that a lot of these adjustments are around earnings information, new release of information, or something else big coming out, like other companies announcing that, well, they're using NVIDIA's chips, for example, in this scenario. There could be competitive, there could be other sympathy moves and such, both from an analyst perspective, providing information, and a broader market perspective. One, just a little bit of a deeper, easier look. Same chart, just zoomed in a little bit more. Again, you can see price and target price on that. And this kind of breaks down some of those recommendations that we're seeing, based on that IBSD information that is on Fidelity.com. And if we pull this back up, we'll shift back over here, and we can see underneath opinions and reports and such that some ISS EVA information, some other quantitative information on here, that we can see this IBESA estimates from Refinitiv. And let me shift this back over. I'm going to pull back up NVIDIA. NVIDIA's top 10 companies, in the S&P 500. I believe they've just about dethroned Apple for the number 2 spot, but it's pretty close. And so I'm just going to pull back over this particular report here. And again, it said there's no clear opinion on that one spot, but there still are opinions built into this. And here we can see stock price and recommendation history. At price, recommendation, buy, sell, hold, and such, where we can actually dive into and we can see, some more that same information just presented a little bit differently that Fidelity provides on our website, without having to have some of these other expensive subscriptions. So with that, Troy, I know you were diving into a different symbol real quick that would ask if we can take a look at. What was the next thing that we're looking at addressing?
Yeah, Nick. So again, I think what can be really helpful too, in addition to the analysts, is doing our own research as well, and then saying, am I coming to the same conclusions as the analysts, or am I seeing things differently? And that can be helpful, right? So if we're using the same security symbol, again, this is like a healthcare name, mid cap, take that for what you will. We can, again, a lot of these tabs, we don't have time to go through every single one of them, but at a quick glance, I can go to statistics. I can go to more here, and at a quick glance, without doing, again, any really in-depth research, what can I see here? PE 51, 5-year PE average 87, PEG ratio 3, price to sales 10. That's most recent quarter annualized, trailing 12 months, price to sales 11, price to book 6. Okay, some of those valuation metrics are a little bit high. But now if I scroll further down and say the growth, okay, some of the growth numbers are pretty good too. So right off the bat, you can understand kind of the context of some of the analysts is if this is a growth name, or if this is a name that, hey, it trades on a high multiple, but the growth is really good. Well, contextually, it would make sense that when there's new earnings, new information, we need to pay close attention to those forward-looking statements. Because if a company suddenly that's trading at high multiples and it's very growth oriented suddenly says, yeah, things are slowing down, they're not as good as we thought they were, that's going to definitely weigh on the stock, because suddenly you're looking at the stock saying, hey, valuation's really high and growth is starting to not look as rosy. And so a lot of times that can affect a sell signal to a lot of growth oriented investors. What do they want to hear? We want to hear that things are great. They're getting even better. We're raising our guidance. We beat on revenue. We beat on earnings. We're generating cash flow. We're going to reinvest more and we're going to grow to the sky. That's really what you want to hear, right? Things along those lines. When you hear the market's competitive, the consumer is a little bit weaker, we're seeing increased competition, those are things that telling you things are getting tough. And so again, if we then look at a chart and then we see, okay, since the last earnings, we can see that the company's stock has come down quite a bit. And if we want to show where earnings are, again, we can click on earnings. And for example, it just reported on 30th. So that was, I believe, Thursday. So we can see the stock gap down. It was volatile on Friday. Today it's trading down. It looks like about 0.25%. So keep in mind too, when you're going into an earnings or if the stock is at a key support resistance level, let's say a lot of analysts are bullish, where if suddenly earnings come out, maybe the forward-looking guidance is a little bit weaker, what would you might expect to happen? You might expect a lot of downgrades to follow. So sometimes the analysts are kind of behind the wave where they have to catch up to the stock. We know that the stock is going to typically move a little faster than fundamental data and fundamental analysts, right? They got to make their reports, they got to gather data, they've got to digest it, read the company reports, and then they have to do their own research and then generate their report and distribute it, right? That's not going to move as fast as the chart. So you have to then say, okay, if you're using fundamental analysis to make these investment decisions, are you going to look at it from a prism of, okay, everybody's bullish. So for it to keep being bullish, that's kind of already priced in. It needs to keep outperforming. A lot of chatter with NVIDIA was just this story where the stock was up a ton, everybody's super bullish. And then we're all kind of waiting around being like, I think everything's priced in. How can the stock go even higher? And several times it actually kept going much higher. And even now it's still continuing to do pretty well. So that's not always the case. There can also be kind of this momentum aspect where things were kind of negative or they're kind of neutral with a lot of these analyst ratings. Stock starts to trickle higher. You start to see an upgrade. Stock goes a little higher. You see another upgrade, another upgrade, another upgrade. So again, sometimes it can be kind of this momentum building kind of lagging effect, or sometimes you see a stock beaten up so much and then you start to see the upgrades come in and then the stock starts to react on the upgrades. So again, a lot of the analysts tend to be lagging, but also look at the most recent upgrades, downgrades, have a healthy amount of skepticism, a healthy amount of a contrarian outlook, and finally have some type of, system in place to manage risk. We know one of the simplest things we can do is position sizing. So if we put literally our whole portfolio in one stock, ideally that's not really a great idea because if one company doesn't do very good, that can really hurt our portfolio. Whereas if we take small bites and we say, all right, let me buy a little bit of this stock, kind of see what happens. And you might be looking at the stock and saying, Troy, okay, it's down quite a bit from where it's been in the last year, right? It's been in the last year as high as around, 230. It's trading at 173. What's different this time? Why is it trading at 130 or 170? And you might ask yourself, okay, the why is a little bit subjective. We can have differences. The fact is it is trading near its lows. So there might be people who say, I like to buy low, sell high. Well, that can work, right? What's the risk? The risk is it might not be a low. It might continue to go lower. So you have to have some system in place to say, when am I wrong? I like when I make a trade or an investment, if I'm wrong, I like to know I'm wrong soon. I don't like to hang on to it and then give excuses, and then a small little losing trade turns into a huge losing trade. So keep in mind that, again, fundamental data is lagging. With the analysts, they do a lot of the research for you, which you can take advantage of and you can use to supplement with your own research, to supplement with your own, process for creating an outlook. But at the end of the day, we know that nobody has a crystal ball, and you have to have some way of saying, all right, it is low now. Could it get lower? Yeah, it could. How much cushion do you want to allow? How much volatility or tolerance do you have for volatility? Do you want to wait? Could your money be better spent elsewhere? There's some people that, apart from buy low, sell high, they might want to wait for that bottom to happen. So, for example, if we look back, to last year, this was December of 23. If we zoom in here just a tad, and I'll actually go to a 1-year chart, we can see right here, you had a kind of a double bottom. Maybe we want to draw a line here, just a horizontal line, and we can see right here, it formed this double bottom and then it started to go higher. Some investors or traders, this is more kind of trading. They might wait to see the bottom. They're not predicting the bottom, right? They wait to see it. And then they say, all right, if it starts to show strength here, you can see it has a little bit of resistance, tucks in, eventually breaks out. It breaks out, goes higher, pulls back, checks back. It never violates new lows, bounces and continues to go higher. Sometimes traders wait to see how it pans out and then trade accordingly. Whereas ideally, if you were an investor, if you bought here and were just patient, it worked out and you got a better entry. But be careful because there's an expression, bottom pickers sometimes get sticky fingers. So if you're bottom hunting, if you're bottom fishing, that is a style, it is a valid approach. just know what's the weakness to that argument. What's the weakness to that strategy? The strategy is if you try to pick a bottom, it might not be the bottom. It might keep going down. So give it some
Yeah.
space, give it some breathing room, but make sure you're not giving it so much where you're just holding on to a bad trade. You're holding on to a bad investment. We know there's going to be companies that are going to do well, and then suddenly they're out of favor, competition's greater, somebody else is taking all the market share, their information, their systems are outdated. Think Blockbuster, think uh, what is it? The oil company that Enron, right? Think about some of these companies that historically went out of business. It can happen. The risk is pretty low, but you don't want to expose yourself to a one-off event. So always have some kind of an exit plan.
One thing I want to add in there and kind of to help wrap things up with is the value also of pairing technical analysis with some of this fundamental analysis. When I was studying for my CFA, it took years to actually study for, pass all the exams, and achieve that particular designation. But many people would be surprised at how big of a role technical analysis played in that, and how much they actually have you study technical analysis to get your CFA designation. And that's because technical analysis can be a very valuable tool for risk management. Looking at things like moving averages, support and resistance and such, knowing when things just aren't looking good from a timing perspective. Fundamental analysis can really help with the what to buy. And if you have 5 different companies, but you can only allocate capital to one of them, which one looks the best fundamentally based on their earnings, based on their future earning potential? Fundamental analysis can help answer that question. But is now a good time to buy or even sell? Technical analysis can help answer that particular question. So for those that are kind of exploring everything with that, and you haven't taken a look at technical analysis yet, please do a little bit of digging into that as a way to help look at that timing decision, help look at risk management and such. And Troy's drawn some really great trend lines, some good support resistance areas and such. Some of this, of course, can be more art versus science. As Troy is drawing that last downtrend line, well, where do you draw? Which peaks do you connect? And things can depend from analyst to analyst. Some things like utilizing moving averages and such. Well, a 20-day or a 50-day moving average or a 200 moving average, it is what it is. There's no moving that, so to speak, and there's no choice on where do you draw that. That can be more that science versus art and such. We see some really good examples of trend lines where trend's broken and then it moves. Support's broken, it moves, both from the upside and the downside. With that, though, we are at time. Any last thoughts you have, Troy, to wrap us up today?
Yeah, just kind of summarizing what we covered. So again, the analysts, they do a lot of research. We can stand on the and piggyback and stand on the shoulders of giants, allow other people and leverage some of their unique talent and expertise. But at the end of the day, we need to have some kind of a process to follow. And even some of the smartest people are wrong all the time. I'm pretty sure some of the smartest people are honest when they're wrong. They'll go on TV, they'll go on CNBC, and they'll say, "Hey, we got this one wrong." So broken clock is right twice a day too. So sometimes don't mistake luck, don't mistake being at the right place at the right time for necessarily expertise or skill as well. So again, have a little bit of a give and take with some of this data, but the idea is more information can be helpful. We want to take this information and it should help us. It should help us make a decision. If it's confusing you, if you find I'm seeing a buy rating somewhere and I'm seeing a sell rating and I'm not really unsure, I should do here, try to again look at something else or understand what's the argument for each side and then trade accordingly and understand where's your weak spot. It's kind of almost like making an argument, Nick. Think about, all right, here's the pros, here's what could work out, here's how it could be wrong, And then the idea is watch a chart, watch the price. If you hold the stock and it just keeps going down, something is different, right? Because if you're thinking, hey, this thing is undervalued and it's getting sold down every single day, well, the market's not agreeing with you. So at what point are you going to say, I guess I'm the wrong person here? And again, there's nothing wrong with doing that. A lot of times, even people as great as, say, Warren Buffett, he'll if you watch a lot of his, old archive videos, he was wrong on a lot of things, right? And so you only sometimes have to be right a few times. And if you can allow some of your winning investments, your winning trades, if you allow those to run, if you're protective and you are defensive when you're wrong, that can really, really be helpful. And sometimes you might want to give things some time. You might want to give things some breathing room. You never know. Sometimes things dive and they look bad, and then suddenly they bounce and they find new life and they continue to grow. So there's a happy medium in there somewhere, and you have to find an approach that works for you. So thanks so much for sharing your insights, Nick. Always helpful hearing from a CFA. Thanks so much for joining us, everyone. We hope to see you again soon. If you haven't joined us, check out some of our market briefings. Today's Monday, so we have unique sessions, but typically the morning around 9:15, we'll have our morning market briefing. If you're joining us in the afternoon around 1:30, we'll have a midday market briefing. At 4 p.m., we'll have our after market briefing. We'll talk about a lot of stocks and things that are making the news. If you're somebody that's fundamental, do your research on the side, but always be in the know. Always kind of have your fingers on the pulse. Again, it's going to help you when you're making some of these decisions. So thanks again for joining us. Take care, everyone, and have a happy rest of your Monday.